Welcome back to the channel. My name is Brad, and today we're going to talk about something that's not in my portfolio and probably never will be, but I at least want to explore it and explain maybe why not, and do some back testing. It's mREITs. So this is where the investor puts money in, it goes to a lender, put a little leverage to it, you get paid back your principal and interest in dividends, and mortgage-backed securities. Anybody's my age might remember what a mortgage-backed security actually is, and maybe the reason I won't invest in them, but maybe you will. Somebody mentioned one yesterday in a comment, so I said, let's take a look at this to see maybe it belongs to be a pillar. Maybe it doesn't belong to be a pillar. Watch to the end and you'll find out if it's going to be a pillar or not. So we're going to look at two separate ones. One, we're going to look at MORT. MORT was brought up to me a couple weeks ago, and I'm like, okay. I blew it off. It's paying about 12%. And, it's got a low expense ratio of 0.43. It's up a little bit this year. Maybe I'll look at it. But I told myself at the time, no. My theory was I'd be very limited in REITs and really staying away from the mortgage REITs. So looking at this, at the 1 year, they're up 25%. That's not bad. In 10 years, they're just about 1.5%. But hey, they're paying me 12%. Maybe this is something I should look into. If I look at a price chart from Seeking Alpha, I see, hey, not bad. Again, halfway impressed. I'm sitting there going, okay, this is worthwhile for me to go ahead and start doing some back testing. One thing I noticed when I was doing my little bit of research, that hey, a lot of these things have the same exact underlying. NLY, that was mentioned yesterday. AGNC, I've heard that initials a couple times. These are the major underlyings of both of these ETFs. So I'm sitting there going, Arbor Realty, that ABR, that one's been around for a while. I remember somebody else, some other YouTuber had that one for a while. So maybe this is something I need to look into. And again, I would look into something of an index that holds a bunch of them and not just a particular one or two, just because I just don't know enough about them. So what is a mREIT? Well, an mREIT must have at least 100 shareholders, right? It has to have 75% of the assets in real estate, including mortgages backed by real estate, government securities. 75% or more of the REIT's gross income must be derived from real estate activities, and at least 90% of the REIT's taxable income must be distributed to shareholders as dividends. If you've been listening the last couple days, that 90% has come up a couple different times. So again, another little interesting thing that's said, that 90% has to be paid out. So I took MORT and went back and tested it, and it barely passed. Well, it didn't just barely pass. It did okay. It actually did okay. When I look at this going 2011, I can take out my $1,000. And again, they pay out quarterly, not monthly, not weekly. And I made that comment yesterday that some of us can budget, but that didn't go over very well. Somebody called me out yesterday about my my little jab at him. It's okay, because he took it as a joke. I can budget, so I could get paid quarterly, and I would just be okay with it. But I prefer monthly. And I look at this chart going, man, it really did well. That's something I really should look at. But I'm still worried about these mREITs. There's just something about them that doesn't feel right about it. And I just looked at this going, after 2020, it never really recovered. I just don't know. I just had that feeling that I just don't know. And if I get that gut feeling that I just don't know, then I just stay away, because I already make bad financial decisions sometimes on my own. I don't need to get into something I don't understand well enough. But I looked at REM, and because I looked at REM because REIT goes all the way back to 2007. Great financial crisis happened in 2008. Well, let me tell you, I used REIT first. Okay. I can't make it up. So when the number turned negative after me taking $1,000 out every quarter, the chart just came really wonka. It was like, how do I present this chart? It's a negative number here. So I went back and said, I'll take it after the great financial crisis, and maybe it'll stay positive. And that's exactly what I did. I said, hey, let's go to 2009. And at the end of the day, taking out my $1,000, no. Failed. This is a failed chart. There is no way I could ever think about investing in something like this. Well, okay, I thought about it, and my thought was correct. Done. mREITs will not be in my portfolio. Now, one thing that I may look at in the future is the bonds that these mREITs put out. That's a different story. From what I can tell from my little bit of research, they perform a whole lot better than the common. So maybe you can grab a 8.5% payer and a bond and get into this. But I'm going to say no. I think I have enough asset classes that my 5 pillars are going to be the ones that I'm going to stick with. And I'm just going to go with it because this didn't work out. And at least I tested it. And now you got to see the testing. Not saying that you shouldn't invest in any of this stuff. Never financial advice, just some guy on the internet. But I'm going to go ahead and say I'm going to take a hard no. Until next time. God bless. And maybe the reason I won't